Hello, let's discuss the importance of diversification in your investment portfolio today. Diversification is a fundamental principle of investment management that involves spreading your investments across various asset classes, sectors, industries, and geographic regions to reduce risk and optimize returns. Here's a detailed look at the importance of diversification in your investment portfolio. 1. Risk reduction. One of the primary benefits of diversification is risk reduction. By spreading your investments across different assets, you can mitigate the impact of a decline in any single investment or asset class. Diversification helps to smooth out fluctuations in your portfolio's value and minimize the potential for significant losses. 2. Protection against market volatility. Diversification helps protect your portfolio against market volatility and unexpected events. Different asset classes such as stocks, bonds, real estate, and commodities tend to perform differently under various market conditions. 3. Maximizing return potential. While diversification aims to reduce risk, it also has the potential to maximize returns. By investing in a mix of assets with different risk-return profiles, you can capture the potential upside of different market segments while minimizing the overall volatility of your portfolio. 4. Opportunity for growth. Diversification provides exposure to a wide range of investment opportunities, allowing you to capitalize on growth prospects across various sectors and regions. 5. Protection against specific risks. Diversification helps protect your portfolio against specific risks associated with individual investments or industries. For example, if you have a large allocation to a single stock or sector, you're vulnerable to company-specific risks such as poor earnings, management issues, or regulatory changes. Diversifying across different stocks and sectors can help minimize these risks. 6. Long-term stability. Diversification contributes to the long-term stability of your investment portfolio. By spreading your investments across different asset classes with varying correlations, you can create a more resilient portfolio that is less susceptible to sharp fluctuations and better positioned to weather market cycles over time. 7. Peace of mind. Diversification provides peace of mind and confidence in your investment strategy. Knowing that your portfolio is well diversified can help you stay disciplined during market fluctuations and resist the temptation to make impulsive investment decisions based on short-term market movements. 8. Flexibility and adaptability. Diversification allows for flexibility and adaptability in your investment approach. As market conditions change and new opportunities arise, you can adjust your portfolio allocation to take advantage of evolving trends while maintaining a diversified and balanced investment strategy. 9. Suitable for different investor profiles. Diversification is suitable for investors of all profiles, from conservative to aggressive. Regardless of your risk tolerance or investment objectives, diversification can be tailored to meet your individual needs and preferences while providing a solid foundation for long-term wealth accumulation. In conclusion, diversification is a cornerstone of prudent investing that offers numerous benefits, including risk reduction, protection against market volatility, maximizing return potential, and long-term stability. By building a diversified investment portfolio that aligns with your financial goals and risk tolerance, you can achieve greater resilience, consistency, and success in reaching your investment objectives over time.